Hi fellow traders, I'm making this video to share my EURUSD analysis with you. So I'll start with daily time frame. Let's go. So you can see that market seems to be reacting to upside from this trend line, which is not just a trend line, it is now a confluence support made by trend line as well as the lower band of Bollinger. You can see the similar reaction last time here when market reacted from this trend line and Bollinger, the lower band of Bollinger. So lower band of Bollinger and trend line together again made confluence support, and market seems to be reacting from this point. The downward move has almost stopped and market is preparing itself to go to the upside. Trend line, however, here is not so important, because if we go back and like to draw like this, if you join these two, if you join this one and this swing low, this trend line will look like this. But if you draw this one, it will look like that. So this is rather better looking trend line, where we can see that this one, this swing low, another swing low, and this third swing low, and almost this last swing low is joining perfectly. And even for these few candles, the market never closed below this trend line. So this is looking like the best way to draw the trend line right now. However, if we think that the trend line is not being perfectly drawn because of different kind of swings, at least we can rely on the lower band of Bollinger to be our support. So this is the observation we have on daily time frame. Let's go to 4-hour time frame to understand what we can see there and what should be the entry style if we are looking for a buy entry. So you can see there are two things here on MACD. One is this dotted line, and another thing is histograms. So right now, if we look at the size of histogram, still the last histogram is looking longer to the downside compared to the previous one, which still shows that the bearish momentum still prevails. So we should wait for the closing of this 4-hour candle, and we should at least make sure that this last histogram shouldn't be longer to the downside than the previous one. It should be rather shorter. And this is for the traders who want to do an aggressive entry. If you are a conservative trader, you would rather like to wait for the closing of candle, and also would like to make sure that the histogram should start forming above this line. This is called signal line, and then it will look like a crossover. For example, if you draw another line joining the border of the histogram, then it will become another line, and then it will look like a crossover to the downside here. So we want a similar crossover to the upside when histograms will start forming above this signal line. So conservative traders would like to wait for the crossover above the signal line, and they would also like to make sure that there should be any bullish candle pattern here on 4-hour time frame. For example, if current candle closes above this high, the previous high, look at my mouse pointer. So if it closes above this high, then it will become an engulfing bullish candle. So there are two ways aggressive traders can enter right after closing of the candle, irrespective of the size of candle or the shape of candle, only after confirming that this histogram should be shorter than the previous one. And if we go to the 1-hour time frame, I would like to show you that there is a slowdown in the price, which can be observed directly by understanding the regular bullish divergence. What is regular bullish divergence? When price makes a lower low and the oscillator, you can use any oscillator, MACD, stochastic, RSI. RSI is one of the most popular oscillator used worldwide, which is why I'm using the same here on 1-hour time frame. I mean, it will be a lengthy discussion if I tell you why I use MACD on 4-hour and RSI on 1-hour in EURUSD. Different pairs, different indicators. This is totally based on my experience of 13 years, so it will not be an easy discussion why RSI here. But yes, I would like to say in simple terms that RSI is an oscillator which can be used to understand divergence on any time frame, but I am using this on 1-hour based on my own experience. Now we'll come back to the observation. So if we look at the EURUSD 1-hour time frame, price made a low, then a lower low, but this lower low is not very far from the previous low. So price is slowing down, bearish momentum is slowing down, which is why you can see that the RSI made higher low. If we join the previous low and current low of RSI. This will be the slope. So RSI made a higher low, which is a regular bullish divergence, which shows simply one thing, that the bearish momentum is slowing down, and you can prepare yourself to find buying opportunity. So on 4-hour time frame, I told you about two different methods, aggressive and conservative entry. What for a simple trader who is neither aggressive nor conservative, who is a trader and who wants to take advantage to the fullest? He can do multi-position trading. So one position with aggressive entry, another position with conservative entry. And what about the exit plan? So let's talk about the risk first. If market starts going down after initially showing you bullish entry opportunities, and let's say you take both kind of entries, aggressive entry and then conservative entry, market shows all bullish indication as I illustrated, and then you see that the market then starts going down, then when to exit in case of loss? We need to wait for the closing of daily candle today, because there is an important news coming from the USA today, which is retail sales. If we go back to previous week and look at the CPI data, I think that was released on Thursday, and there was no difference from forecast. So there was no, the actual release of core CPI, monthly core CPI, was exactly same as the forecast. There was no deviation. However, monthly CPI was 0.1% better than the forecast, and yearly CPI was 0.2% better than the forecast. But there was no significant bullish move in US dollar on Thursday. There was no significant bullish move on in US dollar on Friday either. There was no significant bullish move in US dollar until yesterday. So even though we have seen bullish move yesterday, we cannot see that was driven by CPI. So that's why today retail sales, even if it comes slightly deviated from the forecast, sorry for disturbance, you can forward this video a little. There is a necessary construction going on in my office which I cannot stop, and this is time sensitive video, so I cannot stop this video either. I'll have to make it so that I can publish this on time. Anyway, so coming back to the retail sales, so even the point I'm trying to make is, even if retail sales will be slightly better than forecast, it will not make a significant bullish move in USD, just like it didn't make significant bullish move in USD last week when CPI was released. All right, so what we can do is we can wait for this retail sales release. We can look at the movement. There may be a temporary movement, and market still can go to the upside even after going initially to the downside for 50 pips. Let's say it is right now trading at 108.73. It can go down to 108.25 or something like that. So there may be a 40-50 pips downward movement, which may be a temporary movement, and market can go down like this for a few pips, and then it can come to the upside. So I suggest you to wait for the daily closing. If the bearish move is sustainable after slightly positive retail sales from the US, market should close as a bearish candle. And if it closes as a bearish candle below this current low, then we should exit the position in loss. Otherwise, if there is a temporary downward move and then market starts going up, you will have a bullish candle by the end of the day, and you will be running in floating profit. Now is the time to discuss about what will be our exit plan in case of profit. Plan is very simple, no complication. Simply exit at the midband of the volume zone. There are higher chances of further upward continuation, but we should look at the economic data coming in future, maybe next week, maybe on other days of this week. So it's rather better to close this position at the midband and then plan for re-entry according to the changing market condition. So that's all in this video. Thank you for watching.